Good afternoon, everyone. I'd like to welcome you to this webinar on behalf of the Global Maritime Forum, the High-Level Climate Champions and University College London. We're going to have a session today talking about progress towards shipping's 2030 breakthrough. My name is Jesse Fahnestock. I'm the Director of Decarbonisation at the Global Maritime Forum. Before we get started, I want to say that this session is both being recorded and live streamed via LinkedIn. So I'd like to welcome everyone who's joining on either platform, on Zoom or LinkedIn. And I would like to invite any participant who would like to submit a question to the panelists who are going to be joining us, or to me, to do so using the chat function. And with that, I'd like to get started. We're here to talk about decarbonization of the shipping industry, of course, but specifically the recently published report, Climate Action in Shipping, Progress Towards Shipping's 2030 Breakthrough. This is a report that looks at the sector's progress towards the goal of having 5% of shipping's fuel be scalable zero-emission fuels by 2030. As many of you will know, these are fuels that are not widely available today, but will be needed to deliver much of the industry's decarbonization journey. The report considers a number of elements of progress, including demand for these fuels and related zero-emission shipping services, supply of the fuels and the related technologies, finance, policy, and action from civil society. And we're very happy to have three experts joining us today representing some of these perspectives. We're joined by Domagoj Baresic, who is a research fellow at the Energy Institute of University College London and is also the lead author of this report. We have Taylor Goelz, who's Senior Program Manager for Ocean and Climate at the Aspen Institute and Secretary of the Zero-Emission Maritime Buyers Alliance, which you may know as ZEMBA. And we have Gareth Phillips, who is Manager for Climate and Environmental Finance at the African Development Bank. We'll have an exchange with each of the panelists, and then we'll have some time for questions at the end. But Domagoj, maybe we can start with you.
Sounds good, Jesse.
As the lead author, I'd be very interested to hear what your key takeaways are from the report, whether there might be any new trends or developments that you found particularly interesting or significant, or anything unexpected you would like to point to in the data you looked at.
Well, as you're aware, we've been tracking this progress for the third year now. So over that time, we've seen a few trends develop. And one of the key trends that we saw from last year to this year is really progress has been slower than we would need to be on to actually reach that 5% goal or 5 to 10% goal by 2030. This does not mean that progress has not happened in all levers, but it means that the progress is slower than we would anticipate. Primarily where we see areas of concerns in terms of demand. So we don't actually see the demand that we would expect to see tickling down to the order book for the number of vessels we would want to see committed at this stage of the process in 2024 to actually reach that level of demand. And then secondly, in finance as well, we're not really seeing some of those financial incentives or some of those issuances that we would like to see as well. So the issuances of green bonds, for example, that's not actually in line with what we would like to see. And the portfolios don't seem to be changing as rapidly as might be needed to actually put them in line with what's needed to actually support scalable zero-emission fuels. So that's some of the main aspects that we see. That's not to say that there's not interaction between this and what has to happen on the supply side. So the supply side does look a bit more positive because we do see a lot of projects being announced for green hydrogen, green ammonia, and e-methanol. But we don't have the final investment decisions for a lot of those. So the interlinkages between supply and demand are still there, and there's a lot of uncertainty how that will develop into as well. New trend-wise, we have seen a lot of positive, or should say preliminary positive developments happening on the policy side, some national action, and also on the governmental side or intergovernmental side in the International Maritime Organization, which is quite positive as well. Other trends that I would say is we have seen a continuance of growing share of LNG in the fleet, which is not, I would definitely not a positive development from the perspective of scalable zero-emission fuels, but it's an interesting development that has several insights that could be useful as well.
So as you mentioned, Domagoj, you've been writing this report since its first edition in 2022, and the report tracks a wide range of indicators, some of which you touched on now, and we'll come back to with the other panelists as well. But what do you see happening in the broader maritime landscape that might be driving some of the changes in these indicators? How is the landscape evolving? I'm thinking particularly in light of the 2023 adoption of the revised greenhouse gas strategy at the IMO, which was obviously a big, strong, positive indicator in last year's report. Have you seen that impacting the landscape, and in what way? And do you see any shifts or challenges emerging since that happened?
As you rightfully say, what happened in 2023 was a pivotal movement, and that's what we spoke about a lot in the last year's report. So we're seeing continuation of those positive policy trends at the IMO, but what we don't see enough or to a sufficient amount of level is actually that translating into concrete industry action. Now, there's a couple of reasons why that might be. Perhaps it's a bit too early to see those trends developing. There hasn't been enough time that's passed, or the industry still has different perceptions of where its position is and is still waiting for further policy signals. Having said that, I think a lot of that has to do with just understanding what the perception is and how the industry can take more of a proactive role in that development. But that will come down to the continuation of the IMO process as well, which I think if that goes quickly, it can really push things forward. If not, I think we have to see more private action developments as well. The other aspect I would say is important as well is what we look in demand is primarily to do with the order book, with the direct numbers of what the demand could be. Now, there's a wider positive story that we could develop, and potential that exists that's not actually captured in the news, and that's the overall demand for zero-emission freight or zero-carbon freight. That is potentially far wider, and that could translate to a rapid scale-up of that demand in the order book in the next year or 2 years if the right policy signals are there or if the right demand signals are created at the time.
Yeah, I think we'll come back to that connection between demand for freight and demand for fuels with Taylor next. But I wanted to sort of pick up on your forward-looking comments there. Obviously, this report is not a prognosis; it's not a prediction. That's not the purpose of this report. But I wonder how you see the report evolving as we start to get nearer to the key milestones. Obviously, 2030 being the most relevant one here, and the goal that's now enshrined in the revised strategy of trying to get to 5%, striving for 10%. Are there new things that we're going to need to look at or to keep our eye on? How do you think you might approach it differently as time goes on?
Definitely, because I think once the IMO developments are concreted and developed, I think the focus will shift more from perhaps the wider international policy action to actual implementation of that policy, how to implement the policies that are actually being developed. Inevitably, we have to continue on checking what's happening in finance, what's happening with the order book, what's happening with supply, whether that's being developed. But I think, number one, more granularity in some of those following some of those developments will be key to actually see not that those loans are available, but they're actually being used where they have to be used. Not that the policy mechanisms are in place, but they actually are being implemented or enforced the way that they should be enforced. And I also think from a perspective of the wider industry, civil society, and more of a just and equitable transition, it will be important to actually see whether there are other questions that we have to ask as well, as this becomes a global transition, and to ensure that really no one is truly left behind it.
Can I just ask you, as from a researcher's perspective, do you anticipate that it'll be challenging to get access to this new data to look into these emerging issues? I'm thinking also about issues around participation in shipping transition globally. What do we need to see to make sure that the report, like we want the transition to be, is inclusive?
I think some of the data will be challenging to get initially, and we've seen that in a lot of projects before. I mean, people might be apprehensive or might question why you want data, or there might be data privacy issues, or business issues as well that relate to it. But it's about understanding where those issues are and seeing how to overcome them. And I think with an open perspective and with an openness, we did see that we could actually gather some of those insights, or at least find proxies that show us how these developments happen. But you touch upon a very important point, and this is about how can this be a transition that's a global transition? How can this be a transition to ensure that seafarers, that various communities are involved in? And this is something that I think we have to work on, and also look ourselves in the mirror as researchers, as analysts who are working on this, and say, are we actually capturing the entire story? Where are the gaps? How can we accomplish those gaps? And I think that's the question for us moving forward. Where can we expand that pool of voices from which we are informed, and consequently collect and gather data to provide those insights? Because somewhere we might be missing some elements of data that might be beneficial as well. And hopefully that's something we can work on over the next few years.
That's great. Well, it sounds like an important challenge, and congratulations on the report.
Thank you very much,
If it's okay with you, I think I'm going to move on to the next panelist. Domagoj mentioned the role of demand for zero-emission freight and shipping services. This is an issue where there has been real leadership taken by the Aspen Institute and particularly the Zero-Emission Maritime Buyers Alliance. Taylor, you're in the day-to-day of ZEMBA, and we definitely want to get your perspective on that. Just going back to the first highlighted conclusion from Domagoj that demand for these zero-emission fuels is not on track. From your perspective and perspective of the work you're doing with cargo owners, do you have any reflections on that outcome? Does that sort of chime with your own perception of what's going on in the market?
Yeah, thanks. Thank you so much, Jesse, and for having me here today. So you got a bit of an introduction to ZEMBA, but for those who don't know, it's a first of its kind buyers alliance in the maritime sector with the aim to accelerate commercial deployment of zero-emission shipping, enable economies of scale, and help freight buyers maximize emissions reduction potential beyond what they could accomplish alone. And earlier this year, we completed the first ever collective tender for the environmental attributes associated with zero-emission shipping services. But saying that, everything in the decarbonization of this sector is nuanced. And so understanding if shipping's decarbonization is on track is, it's not a light switch. It's not, is it on track? Is it off track? In my view, and many of the drivers outlined in this report are really interconnected. I've had the pleasure of reviewing this report over the last several years, and so I've been able to see that nuance and complexity come into the report more so, from simply reporting out to an even more useful tool that's really helping the sector better understand the complexities, because it's kind of we're all moving together, and we all need to be sending signals and having collaboration across the sector to drive the decarbonization forward. So for the demand side to achieve the 2030 goals outlined in this report, all the other levers need to also achieve these goals and be working towards these goals. And so the entire sector really needs to consider the role that it's playing to help incentivize demand and supply, technology uptake, policy, to facilitate the creation of enabling conditions for the deployment of scalable zero-emission fuels. Because if you have demand for these fuels, but no port is willing to bunker them, it's all interconnected. And I really think that the report's doing a great job of highlighting that. And that's maybe why it looks like levers aren't on track, or they're growing, they're going towards being on track. But because it's complicated, and we still do need first movers to take more action. We're really trying to help drive that through ZEMBA. We've seen a lot of other first movers taking action, and I think we're seeing action today that, from my perspective, would not have been possible even a few years ago. But for demand to really get on track so that these zero-emission solutions can come to scale, the entire value chain needs certainty, and quickly. Both regulatory certainty, which Domagoj mentioned, and certainty from their customers, whoever their customer is. Everyone in the value chain then is looking at their own customers, that they're willing to pay a premium. We talk about the S-curve a lot with our freight buyers through our work with ZEMBA, and I think that the work that's happening right now that's being outlined in the report is laying the groundwork for the exponential growth that we will see. What we've seen with many other markets, renewable energy has had the same transition, but I think what this report is showing is that we need to get there faster, the speed that we need to achieve our collective goals.
It's nice to hear a positive forward-looking view as well. You quickly and humbly sort of mentioned the successful first tender that ZEMBA ran earlier in the year. But for me, the most important word there is first, and you're not going to stop doing this. And so one thing I'd like to hear a little bit about is what your priorities are, and maybe more specifically, what you perceive the cargo owners you work with, what their priorities are for procuring zero-emission shipping services going forward. What is it that they really want out of this process?
Yeah, so I mentioned it a little bit in my last answer, but wanted to clarify the multiple layers of demand that exist within the maritime value chain. So there's demand from carriers and ship operators for the scalable, zero-emission, fuel-ready, and capable vessels. And then there's demand from the stakeholders that I help represent, these climate-leading freight buyers who are demonstrating demand for scalable, zero-emission shipping services. So through ZEMBA, these companies are really demonstrating for the first time a willingness to pay for zero-emission shipping services beyond what's provided in the market today and beyond what's required by regulation. And we've seen, through this first tender, this was really a pilot. We were seeing if customers were willing to do this, if this theory of change would work. And we've seen that they're willing to do their part, but this willingness will not last forever. ZEMBA is meant to be kind of the tip of the spear to help catalyze new markets. But at the end of the day, the demand aggregated through ZEMBA doesn't exist in a vacuum. We've spent the last 8 months designing our next tender, which you'll hear more about in the coming month, and hopefully the plan is to launch it at the beginning of next year, to help push the market to go further than it would have gone otherwise. But we also have to make sure we're realistic about what the market can deliver in the next few years. So we just published the results of a request for information, an RFI that we did earlier this summer with the Lloyd's Register Maritime Decarbonization Hub. And the results suggest that ZEMBA can focus on e-fuel deployment for 2027, for a 2027 deployment, which we're really excited about that future and seeing what that looks like. So I think the short answer of it is that cargo owners are willing to do their part, and I'm really glad that we're highlighted as a win in the demand sector. But I really hope that we are that tip of the spear and that we're no longer, we're first movers, but that we invite more to join us as first movers in the next iteration of this report.
Thanks a lot, Taylor, and good luck with the upcoming tender. So I'd like to sort of jump off from your comment about the need to scale up and act more broadly in the sector. And of course, a big key to that is going to be finance and access to finance. So if we could maybe go to Gareth Phillips from the African Development Bank. Gareth, thank you for joining us today. The report looks at finance, and if I understand the methodology correctly, it needs to use a fair amount of proxies for identifying what relevant financial flows to shipping decarbonization might be. But I think it's probably fair to say that there appears to be a slight slowdown in finance that could support zero emission shipping in 2024. I wonder if you have any reflections on that. What might be driving that? What are some of the challenges facing climate finance more broadly, which is something you've been working with for a long time? So.
Yeah, right. Well, thanks very much indeed for inviting me to be here. I think the first point to make is that actually defining climate finance is very difficult. We don't have an international definition, and tracking it is also very difficult. So despite, the fact that the data shows a decline, it could well be that there are pockets of finance that are going on and countries that finance is being directed in the right direction that isn't necessarily being picked up on. So, I wouldn't take 1 year's figures as as an indication that things aren't going in the right direction. But you're right. There are many challenges, and I think that the first challenge, which some of the previous speakers have touched on, is really the political will. Having the political statements and the commitments to drive down targets is fundamentally important. And of course, as I'm sure everybody's aware, we're heading into the next conference of the parties, COP29 in Baku, and talk about being a climate finance COP, but also many clouds on the horizon. There are threats in a number of different areas that could derail things. So getting that political commitment is really important, and I think that then trickles down to kind of shareholder and stakeholder awareness. I don't know the answer, but I'd really like to know, there's a hurricane hitting Florida right now, and the financial sector is going to pick up a very large bill for fixing that. I just wonder, how much of that financial sector is still investing in fossil fuel infrastructure? What is the level of awareness among shareholders and stakeholders for where their money is being invested? Because the Paris Agreement talks about, or in Article 2.c, talks about all financial flows being aligned with the goals of the Paris Agreement. And if that were reality, and if things were happening in that direction, then not only should it be easier to finance green investments through sustainability bonds and so on, that, they should be becoming more popular, but actually it should also be getting harder. It should be getting more expensive to finance fossil fueled infrastructure. And there's a real reason behind that. It's because, if you order a ship now that's a fossil fuel vehicle, you are most likely building a stranded asset or something that is going to become a stranded asset in 20 years' time. It's going to be hard to find business for that ship because the demand for zero emission shipping is going, well, if the political commitment is there, that demand must become so great that those assets become stranded. And I think that's, there's a great need to raise awareness amongst investors and the financial institutions to be more aware of where their funding is going and what kind of assets is being invested into.
It reminds me a little bit of something that Domagoj said in the beginning with relation to the revised greenhouse gas strategy, that there seems to be a sort of a residual disconnect between the political signals that have been sent and the actions actually being taken in the industry, and that maybe this will take time to resolve, but time is not something we have a lot to spare. I know your remit is broader than shipping, but I wonder if you could say a little bit about what the role or potential role of multilateral finance institutions could be in shipping's transition. What kinds of tools can institutions like the African Development Bank bring?
Yes, indeed. So it's quite interesting because as the African Development Bank, obviously we're African focused, so we serve our regional member countries, and they're shipping. I don't think that it's such a a major hub for shipping companies. The international aspect of shipping is a challenge. So I think it's unlikely that we can provide support to owners of ships and sort of shipping transport. But I think there is a big role to play in port infrastructure. And Taylor mentioned, the bunkering, for example, of fuels. We have provided support, for example, to the port of Cotonou in Benin to help them construct more climate resilient and low carbon infrastructure. And we do see other inquiries coming in this space. So I think that, there is a potential for institutions, well, in the African Development Bank's case, potential to support particularly port infrastructure. Some of the other MDBs might have more involvement in supporting shipping lines. But I think the kinds of tools that we can bring, the fact is our bread and butter is concessional loans. And this really is the main thing that we can bring to the table. So these are longer term loans, longer tenor periods with more concessional rates, and they can be blended with more expensive debt and cheaper debt. So, for example, my team accesses funding from the Green Climate Fund, which is probably the most concessional debt that we can bring. And that can be blended with less concessional debt from other DFIs, development finance institutions, and even commercial debt from investors. So, we're able to take a first loss position and so on to help crowd in other sources of finance. And I think that, it's a bit old-fashioned concessional debt, but the fact is it's still a very powerful instrument. And typically it also comes with some technical assistance, grant money, which is very important, not only for doing the kind of feasibility studies and so on, but actually I think that there's a huge need for technical assistance to understand the role of reporting carbon emissions in shipping and linking into things like the carbon border adjustment mechanism, which maybe we'll come on to in the later discussions. I think that's an incredibly important instrument that can drive the further development of low carbon shipping, but it needs a lot of technical assistance to be able to engage in it.
Thanks. I actually am going to freelance a little bit here, which I guess is my right as the moderator, because we have a question from the chat that I think is actually quite appropriate for you to take. And you mentioned a little bit about development banks' potential role in crowding in private finance. What do you see as other keys to attracting private capital into this kind of transition? What will make sure that the private finance can be made available?
Well, I think the key thing is the demand, and particularly if we look in terms of investing in the fuel supply line, then there has to be the demand. And, if we know that there's going to be demand for zero emission fuels, then it's much easier to build those pipelines to provide the fuel. These are high investment, upfront investments, particularly if we look at hydrogen, not only in the solar power or the wind power or hydro, but then the cost of the hydrolysis units and the storage, the treatment, the conversion to whichever fuel you're going to use. This is a high level of investment that's required, and we can't make that if we don't know that there's going to be demand.
We seem to have lost Gareth there.
Oh dear. Can you hear me? Jesse, can you hear me?
I can hear you, Gareth.
You can hear me.
I
wonder, it's maybe Jesse that we've lost. Well, let me carry on, because I was just going to say that, there are other aspects to the fuel supply line, which, we're not entirely reliant upon the shipping as being the only off-taker, because, of course, these fuels are also feedstocks for industrial processes. They're feedstocks for the hard-to-abate sector. And we also have massive demand for energy access in African countries. So if you look at somewhere like sort of Namibia, South Africa, the potential to invest into renewable energy supply lines that can feed into hydrogen units and so on, there's a tremendous opportunity there, and it needs large-scale investment. And I think demand for shipping fuels can be an important element in underpinning investments into those kinds of technologies. Now, I don't know if we've lost Jesse. I'm not seeing him on the screen. In which case, yes, I think we have. So since I have the microphone, let me just carry on a little bit, because I wanted to talk a little bit about the carbon border adjustment mechanism, which I think is also it's viewed in Africa as a barrier to trade, and I mean there is a cost associated with getting involved in it. But actually, if you don't have to buy European allowances at the point of import into Europe, then that's a massive cost saving, and we can finance investment into energy infrastructure on the basis of avoiding that cost. And if you talk about carbon markets, anybody who follows those at the moment, the prices are down rock bottom in the voluntary carbon market. It's $1 or $2 if you're lucky. We don't really have clear price signals for ITMOs or mitigation outcomes, but we know in the European emissions trading scheme, then the price is sort of €70 a ton, and being able to lock into avoided costs at that level can actually provide significant leverage potential for financing some of these investments. But it needs the technical assistance to develop these things, because countries really need to put in place their own domestic emissions trading schemes, sectoral emission trading schemes, and so that they can participate. But I think that is it's a bright spot on the horizon, and we see the EU coming forward with this. Any other country that is serious about domestic emissions trading scheme is going to have to deal with leakage in a similar manner. So I think we're going to see things like CBAM being replicated from other places, and I think it's a great driver. Jesse, I was filling in some space while you took a break there. Let me hand back to you.
I appreciate that, live streams are entertaining for many reasons. Sorry, I actually had a brief power outage here, so I lost everything, but I'm back. We did have we have only a few minutes left, but we had some excellent questions from the chat, and I wanted to throw one to the full panel. So we have someone has asked, without a clear alternative fuel, how do people ensure that they're people, I assume that's companies and investors, ensure they're not taking on too much risk, for example, betting on the wrong technology and ending up with stranded assets? I would particularly like to hear from Taylor and Domagoj on this. Domagoj, I know you've worked a lot on scenarios for different fuels and their roles in the future system. And Taylor, I know this is a question that your stakeholders must be asking daily. So maybe if you could each take a quick crack at that.
Yeah, if I could have a crystal ball, this is probably the thing I would wish to see the most. And I think that our approach of going forward is partnerships across the sector, and holding hands and taking the leap together, and really understanding what the risks are and what the opportunities are. And I think Gareth said it really well too, of that in a few decades, maybe even sooner, fossil fuel vessels will be stranded assets. So I think that it's understanding the risks. I think that if ship operators, if they aren't ordering dual fuel ships now, then they're setting themselves up for some difficulties down the road. So I think that's a great first step. And I really think that we've briefly touched on the IMO, but that's really the strong signal that we all need to understand the direction going forward, and that regulatory certainty to put the big dollars or euros or whatever down to invest in new infrastructure.
I think it's what people I think often hear partnership and collaboration as a kind of fluffy, meaningless concept, but really in a moment like this, I think it's important what you say, Taylor. This is about sharing risk, right? This is about being able to make difficult decisions, and partnerships like ZEMBA and others out there can really help to do that. Domagoj, any thoughts from you on the stranded asset and technology uncertainty risk?
Thank you, Jesse. And I'll just add, I agree with what Taylor said. That's definitely what I would say as well, that pooling of assets and pooling of resources, and that's what can eliminate a lot of these risks. So understanding where you're coming from. And what the report does from our side is saying we don't know what the fuel will be. We're giving you options that are aligned with what the strategy, 2023 strategy said. One question I would tell anyone who's investing in the fuels that perhaps they can ask themselves as well is, you have to see what makes the business case today, but what will make that business case 5-10 years down the line. So what fuel can you invest in now and have that viable transition pathway going into the future, so you don't end up with stranded assets? Or if you're going for some kind of transitional option at the moment, that you know it's along the right path where you have to be down the line, because some options or some pathways might offer less risk than others.
I think that's a great way to end. We're 1 minute over time here, but I'd like to thank all three of you for joining us today. A very interesting conversation, and thank you all for your contributions to this report. And I think with that, we can wrap up today's session. And thanks to everyone online for joining us. I hope you found it interesting.